Okay, welcome back to the sixth episode of our trading strategy. So today we are going to talk about equilibrium. Okay, it's a fairly simple concept and it's also the last concept of our trading strategy before we start actually placing the orders. Okay, so what is equilibrium actually is like that. So when we have a downtrend, for example, like this, the price will go up, okay? It will right now here break the structure. Here is the break of structure. And here we also have our order block, okay? This is an order block. So what is an equilibrium actually is that when we break structure to the top, just like we did it here, then equilibrium is actually the middle point of this move up, okay? It's the middle point of this move up. So what do? We take one of the tools, we go from up to top, and then we drag it, okay? And then we see that the 0.5 is right now here. So what will the price usually do? So the price tends to then go down to the either 0.5 point or somewhere below right now here into the order block, and then it's gonna go up to the uptrend, okay? So then we are in an uptrend, and then we want to break structure again. We go down. What happens here? We break structure, okay? And also what happens is we have our order block right now here, okay? So then we wait, okay? We wait that the price goes down, 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 and then when we start printing the green candles, like this, for example, we then take our tool, for example, and then we draw like this, okay? So now we know that below 50% value is the price is actually not in a fair value or a discount zone, okay? It's in an expensive zone, so to say, but above 50 is in a discount zone. Why? Because for banks, it's actually better if they go a little bit up, okay, into the equilibrium, into this from 1 to 0.5, into this discount zone, okay, this is a discount zone. It's better that the price goes to discount zone, fills the orders right now here for a cheaper price, or actually for a higher price, and then sell even further down, because they have actually higher profit, okay? Because if we compare the profits, for example, if we compare this line right now here with this line right now here, it's, in our case, it would be around 50 euros, okay? 50 euros difference per order. And if they have millions of orders, then, you know, millions times 50, it's 50 millions euros more profit. You know what I'm saying? So this is essentially equilibrium, okay? Equilibrium is when we start printing, when we do the break of structure, then we wait until the price goes below or above 50% of that movement to the up, okay, or to the down, and then we wait that it retraces, and then we go up or down, okay? So now let's show it on the actual graph so that it's easier for you to understand, because one thing is talking about the theory, but then the other thing is actually showing it, okay? So let me show you here, for example. I remember this was the trade that I took on Friday. So we were here in a downtrend. Let me mark it like this. Okay, so we were in downtrend, up, down, okay. Here, you see what happened. Here, we broke structure to the upside, okay. How do I know that we broke structure? Because we closed with this candle, we closed bullish, okay. So then I immediately draw order block. Order block is the last red candle in this case. I draw the order block, okay. And additionally, wait, let me make it a little bit smaller. Additionally, I was waiting that we start printing the red candle, okay. So we broke structure, I waited that we printed the red candle, and then after that I took the equilibrium, I draw equilibrium from the last red candle, so from the last low to the last high that happened. Okay, like this. You see the price went, here is the middle point, the price went down like below the 50%, and then it started to retrace and we were making a bull run, absolute bull run. Okay, so this is basically what equilibrium is, you know. Let's go, maybe today we can see another example on Bitcoin Cash, because today stock market is open, and let's take a look. Okay, let's take a look here, for example. So we are in uptrend, now we are in downtrend, 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 downtrend. Okay, cool. Here we broke the structure. We will draw equilibrium. We will draw our order block. We will draw equilibrium from the last low to the last high. This is so lagging. Okay, where is the point? Okay, here is the 50% like point. Okay, the price didn't go directly to it, but then we still exploded. Okay, so yeah, that's it. Maybe let's take a look at some other example, but you know what I mean. Let's go maybe for the example to the downside, if we find any good, because right now we are ripping, so I don't know if we will find any good example to the downside. Okay, maybe, okay, let's see, maybe here. Let's see what we have. Okay, here we have another bullish example. Let's go. Yeah, I remember this trade. I didn't take it, but I was trying to analyze it. Okay, so we are in uptrend, up, down, up, down, up, down, up, down. Okay, here we break the structure, but then we start ripping. Okay, so this is a bad example. Or maybe, nah, it's a bad one. Okay, but you see what I'm trying to say. Okay, here, for example, let's go. Here we go up, up, up. Okay, we break the structure. Here we break the structure, so then I'm waiting, okay, that we start printing the green candles. So I take from the last high to the recent low. Okay, look, the price goes up. Here we have a little bit of movement, the price goes down then, okay, and then it goes again up and then down again. You see what I'm saying? So that's essentially what equilibrium is. Okay, it's that point when we make a move up. Yeah, like this, you know, it's easy to explain it. So actually equilibrium, it goes, for example, we are in uptrend. Okay, we go like this, we go up, we go down, we break the structure, and then we draw our equilibrium. So our equilibrium is gonna be from here to here, okay, and then here it's gonna be around 50%. So we wait that the price goes above 50 and then goes down, okay. Or in another scenario, okay, we go up, down, up, down, up, we break the structure. So now our equilibrium is from here to here. Middle point is right now here. We wait that the price goes down below the middle point and then up, 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 up. Okay, that's about it, bro. It's very simple concept, and yeah, it's very useful as well to see up until which point the price will go down or up before we then buy or sell. Okay, so we have better entry and therefore more profit. So yeah, that's about it for this, bro. Feel free to join also our Discord server where we do trading breakdowns, we do daily analysis, we have self-improvement as well, a little bit of everything for everyone, the most important topics at least. So do the hard work and see you on top of the world. Tomorrow we have trading strategy and execution, so stay tuned.